All right, guys, welcome to June 7th pre-recorded Zoom. I actually already started the Zoom. I just completely forgot that I wasn't recording. But if you guys remember, we were anticipating the continuation based on the internal liquidity grab, right? And as you can see, we have now pretty much had a continuation BOS. However, I'm not still fully convinced with the with the bullish bias. And the reason why I'm saying that is, if you guys remember, I believe we had our whole POI being right around there. But as of today, right, I'm seeing the bounce off of a daily inefficiency, and internally we are seeing, right, the minor intraday reaction come into play. And as of now, I don't really want to justify any type of bearish scenario, right? Just because if we're going just off of solidified points, the overall range, right, would be obviously from our low into our high. And we had mentioned last week that we could potentially still be looking at a daily continuation into the upside. But in my opinion, that's becoming a bit hard to justify unless we break this POI here. The reason why that POI is significant to me is because, as you can see, the amount of effort this is taking, right, to bring us into a relative POI, it's a lot. And not only that, we're giving immediate reactions, whereas the momentum upwards isn't anywhere near what it is downwards. So the only thing I can conclude from there is that the overall momentum is still to the downside. And now that I'm justifying this with a daily POI, right, you could even say that this is a pause before we continue lower. And now we're being confirmed with a reaction here. The only way I'm going to justify any type of bullish scenario now is if we break here, we make a significant new high, and we at least reach, above that POI, because then that would be order flow disruption. So I'm looking at that daily POI, and I'm also now looking at the internal minor intraday move, or the minor intraday liquidity grab. So now from an intraday perspective, right, you would realistically look for that bearish scenario, right? So like I said, if that breaks, that's invalidated, which is fine, but I don't want to let go of that that bearish bias just yet, especially because we're starting to really flag up, and we can really see some big move come out of here. So whether it's to the upside or to the downside, this is going to be, this will probably be this week's move, if I'm being honest. Because it makes sense from an order flow perspective, it makes sense from a momentum perspective, right? It supports our general idea of what our monthly closure was last week and what we had, been talking about over the past couple of weeks. So I'm still trying to favor that downside move. And now even with AUDUSD, as you guys know, on Friday, we had our entire POI being that daily wick. And as of now, we're seeing that bounce. We're seeing the bounce, right? We can even reduce our POI to here now, right, where we had a solidified point, right, into a new structural range, and the momentum is still to the upside. So the issue with, with why I didn't want to trade this scenario was the wick here. Just because of a prior experience, this could be a solidified point, and this could realistically be a scenario where we continue lower from here. So the only reason why I couldn't justify anything internally, right, is because it didn't really make much sense to me outside of the bullish model. The bullish model being the two red lines, right, into a liquidity grab via the bullish POI based on the internal bullish trend. And this would have been justified for a limit if you were looking at it from that scenario, because I believe it was M3. Yes, if you're going from a limit, then obviously your SL is at the invalidation, and that makes a whole lot of sense there. But I'll explain why I didn't take this scenario in a bit. Right, it would have been a bit over 5 pips, and that would be trailing right now at over 40 pips. So now it's getting a bit intriguing, because the only reason I couldn't justify this move was because of the initial reaction, whether this was news or whether this was just, you know, a false move. It doesn't really matter to me. What matters to me is that this is a confirmed reaction. We have taken liquidity, and it's then immediately gone into a continuation BOS in the opposite direction. So the reason why this POI is starting to become hard to justify was because of that. So because that was the case, I would have preferred something in the internal, or from a scout perspective. But up until, this entry and this impulsive move, up until then, let me just move it based on behind, where I've just stopped this, right? Up until now, we are still bearish, just because there was a bearish, I believe it was M2 or M3. I believe it was M3. There was, an M3 POI. We are still bearish because that led into, right? The POI led into a bearish liquidity grab. So realistically, the continuation would have been in between this line and this line, this general area. So because that order flow was still in play, it was a lot harder for me to justify, this type of scenario. So in your case, if you're attempting to trade this, this is where you kind of figure out what type of trader you want to become, whether you want to miss a move, whether you only want to catch high probability trades. But if you only focus on that, trust me, you will miss a lot of moves. I'm not saying that's a bad thing, not saying that's a good thing. It's just, I'm just trying to provoke your thinking with this. Like for example, in an ideal scenario, if you're risk heavy, then you could easily set your limit based on the counter. The counter scenario being the bullish liquidity grab, and with the invalidation being at the SL. But you can also play the immediate continuation with the SL above here. So you would take one loss, but inevitably you'd catch the move. So it's really up to you whether you want to focus on high probability, you want to focus on hedging, right? Or you want to focus on just trying to catch every continuation. And I think that's the beauty of day trading, because you have to ask these questions when you're making your models, because you can't really focus on how much money you're making until you're focused on, or until you're done completing your models and you've done testing your models, because you can't make a dime if you can't win a trade, right? Same thing with EURUSD. We have this really good, bullish LG scenario, and that would be justified, with the inefficiency fill and the invalidation being at the low. But first, let me cover this POI. The POI that I was actually looking at for today was in that general area here. Why? Because this is, technically a turbulence point before, we gave a big impulsive move. And the reason why that's important is because those turbulent points are usually a higher structural level POI. Or in this case, it would have been a type of swing POI, right? But I just like to keep it broad. And if you're playing based on reaction, then boom, that's how you get your theoretical, high probability scenario. So because we're seeing this bounce, we're even seeing the break of structure, right? We're approaching an interesting area, because we have, for example, we have our previous structure here, have our previous structure being tapped there, right? That's technically 50% inefficiency. And if we start to zoom in, right, we're seeing right, obviously the break of structure, which is the continuation BOS, which is now solidifies low, high into retracement. And we're now seeing a bounce from here with a confirmed reaction technically, because we took out structure there. So this is a breaking point here, because we perfectly topped that, and we're now seeing this continuation internally, which is the counter of that structure, of that structure point reaction. So as of now, this is going to be very, very crucial right here. This is going to tell us whether we're going to continue higher, or if this is going to be a sign of reversal. So just keep your eyes on here, because especially with DXY, like I said, I'm still really favoring that downside, mainly because of the LG model in place, and we have a daily POI supporting that. So realistically, we can still target here. Okay, so, and that would obviously be the counter, which would be the previous high up here. So now that we've had, you know, essentially the continuation BOS on top of the continuation BOS, right, this breaking point is going to be very, very crucial to see how much more we can go higher, because if we're looking at this from even a daily perspective, we can very well see a pretty big move into the upside, because there has been a significant liquidity grab here, and there is signs of bullishness within this quote-unquote range. So, you know, in my opinion, I think we're still seeing a bit higher pricing. How far, that I cannot tell you. Like I said, I cannot really tell you what happens after the liquidity is taken, because everything can change like that. So yeah, with that being said, let's see how this reacts over the next week, and we'll go from there. So yeah, just remember, guys, keep working on those models, show me those models, and it's until then that you can, you know, actually start seeing true progression with this. So yeah, with that being said, I'll see you guys on Friday.